All right, let's dive into Delhivery's second quarter financials for fiscal year 25. We've got their official filing and investor presentation right here. And, well, it is a pretty crucial time for them, right, leading up to the festive season. I mean, that's make or break for any logistics company in India. So, did they deliver?
Well, the revenue numbers tell a pretty interesting story, don't they? 12.8% growth year over year, hitting 2,190 crore. But then if you look at it quarter over quarter, it's only 0.8%. So it kind of makes you wonder, is growth slowing down? Or, is there something else going on here?
Yeah, it's a bit of a head scratcher, especially when you think about all the investments Delivery's been making, expanding their infrastructure, all that. How do they balance these ambitious expansions with staying profitable?
That's where it gets kind of interesting. They've achieved a 2.6% EBITDA margin and a 0.4% TPT margin. Basically, for every 100 rupees they make, they're keeping 2.6 as profit before all the other stuff, interest, taxes, depreciation. And that's a big jump from the same quarter last year. Shows they're managing things pretty well even while they're growing.
Makes you wonder what's driving that profitability, though, right? Is it just revenue growth, or are they getting more efficient with their operations?
Probably a mix of both, to be honest. Let's break down their segment performance. So express parcel shipments, that's a big chunk of their business. Those shipments grew 2.5% year over year. But get this, the revenue for that segment actually grew by 7%. So they're figuring out how to make more money from each shipment, optimize the pricing, the operations.
Yeah, squeezing a bit more out of each delivery. Smart. What about their other segments? Anything stand out this quarter?
Well, their PTL freight segment is killing it. Tonnage surged 22.7% year over year, and that translated to a 27% jump in revenue. It's a lot of growth.
Yeah.
Makes you wonder if they're outpacing the overall market in India, or maybe just riding the wave. Hard to say.
Yeah, I got to see if they're actually grabbing more market share.
Right.
And their TLA and cross-border segments, those both saw double-digit growth year over year too, right? What about supply chain services?
You got it. TL and cross-border both looking strong. Supply chain services, though, that actually saw a decline. Now, it's tough to, draw any firm conclusions from just one quarter, but it's a trend, maybe something to keep an eye on. Could be a sign of how things are shifting in the overall logistics landscape in India.
Interesting. Now, their investor presentation, they talk a lot about technology. Are they just, throwing around buzzwords? Or are they actually using these investments to make things more efficient,
Yeah.
improve their customer experience, all that?
Oh, no, I think there's some real substance there. They're using tech to actually move boxes smarter, not just move more boxes. Take AI and machine learning, right? They're using that to optimize delivery routes and, predict demand fluctuations, even automate some of the stuff they do in the warehouses. So there are some concrete examples of tech making a difference in their operations.
That's pretty cool. I hadn't even thought about AI for something like delivery routes. But, okay, they've got the financials, they've got the tech, but what about the challenges? This whole RTO volumes thing they mentioned, that caught my eye. What is that all about? Why should our listener care?
RTO, that's return to origin. Basically, when a shipment has to be sent back to where it started. And the thing is, it seems like a pretty big chunk of their shipments are being returned. So that raises some questions, like how's that affecting their profits? And, how smoothly are their operations running if they're dealing with all these returns?
Yeah, returns sound like a logistical nightmare and definitely not good for profits.
Exactly. Every return trip, that eats into their profits, right? And it just adds more complexity to their whole operation. So figuring out why those RTO volumes are so high, that's really important. Is it, customers not happy with what they get, bad product descriptions on those e-commerce sites, maybe even some fraudulent orders? Figuring that out, that could tell us a lot about how e-commerce is actually working in India and the kind of headaches it's giving logistics companies.
That's a good point. Now, about their financials, they're sitting on a pretty nice pile of cash, right? 5,488 crore. What does that say about their financial stability?
Oh, that's a big advantage, that cash. Shows they're stable, gives them options, They're not desperate for funding so they can make strategic moves, maybe buy up another company, invest in some new tech, or even, ride out a tough market without having to panic.
So it's a safety net, but also ammo for growth. Now, they mentioned ESOPs in their presentation, employee stock options, right?
Yeah, the ESOPs, they've projected some future costs related to those. So that's something that could hit their financials down the line. Basically, as those stock options vest, they'll have to record an expense. Might affect their profitability.
Okay, something to keep an eye on. But let's zoom out a bit. We've looked at delivery, their numbers, but they don't operate in a vacuum, right? What's the competition like? Any big threats on the horizon?
The Indian logistics market, it's a battleground, man. You've got the big guys, the ones who've been around forever, like Blue Dart, Gaudi, and then you've got these new players, hungry startups like ExpressBees and Ecom Express, and they've got a lot of investor money behind them.
So a lot of companies fighting for a piece of the pie. What's delivery strategy then? How do they stand out in all that chaos?
Well, they're playing the differentiation game. They've got this huge network, right? Reaches over 18,000 PIN codes across India. So their reach, that's a big advantage. And then there's the tech, all those investments we talked about. They're trying to make their operations slicker, offer better service.
So basically, be big enough to compete on price, but smart enough to offer something extra, something the smaller guys can't.
Yeah, exactly. And that's where all that automation, data analytics, even robotics that comes in.
Hmm.
They're trying to build this like tech-powered logistics machine that can handle everything India throws at it and give customers a better experience.
Right. But even with good financials and tech, there's all the external stuff, like inflation, fuel prices going crazy. How are those things affecting them?
Those macroeconomic headwinds, they're a pain for everyone in logistics, right? Inflation pushes up all their costs, transportation, labor, everything. And fuel prices, who knows what those are going to do next week, makes it really tough to predict and manage their expenses.
Sounds like a constant balancing act. Keep costs down, but keep investing, keep prices competitive.
Yeah, you got it. And that's why their focus on efficiency is so important. They got to squeeze every bit of productivity they can out of their operations to deal with all that external pressure.
All right. Before we move on, let's talk a little more about those RTO volumes. We know what it means, but why is it such a big deal for delivery?
Well, think about it. Every return, that's a sale they lost. It's resources they wasted. And, it could mean a customer who's not happy. Plus, they have to deal with the whole return process, the logistics of getting that package back.
So it's not just the cost of the return trip, it's the lost revenue, the potential damage to their reputation if customers start getting annoyed.
Exactly. And when you see a lot of returns, it raises a flag, right? It tells you there might be something wrong somewhere, something that needs to be fixed.
Like what? What could be driving all those returns?
Could be a bunch of things, honestly. Maybe the product descriptions on the e-commerce sites are misleading. Maybe they're having trouble meeting delivery deadlines. Or maybe the products themselves are just not good quality. Who knows?
So lots of potential culprits.
Definitely. They really need to dig into their data, figure out what's causing those returns, and then, work with their partners, the e-commerce companies, to find solutions.
It's not something they can fix on their own.
Nope. They need to work with the whole ecosystem, make the e-commerce experience better, smooth out any bumps in the road, and hopefully, reduce those costly returns.
Right, so we've covered a lot about where delivery stands right now, the good and the bad. But what about the future? What are we looking at for their growth?
Well, e-commerce in India, that's still growing like crazy. Huge opportunity for companies like Delhivery.
So they're in a good spot to ride that wave.
They are, but the question is, can they execute their strategy? All those investments they're making, the capacity building, the tech, even buying other companies, that's all about grabbing a bigger slice of that growing market.
Sounds like they're betting big on e-commerce. Anything else they're looking at for growth?
They're also branching out into other areas like cross-border logistics and supply chain solutions. They can use their existing infrastructure and expertise to offer more services, which is smart.
So diversify their income, find new ways to make money.
Yeah, exactly. In a market like India, you don't want to put all your eggs in one basket.
Yeah.
Got to be flexible, adapt to the changes.
That's a good point. We'll be right back after a quick break to keep unpacking Delhivery's Q2 FY25 performance. We'll hit the key takeaways and leave you with something to think about. Stay tuned. Okay, so before the break, we were talking about that massive pile of cash Delhivery's sitting on. 5,488 crore, that's a lot of financial wiggle room.
Yeah, no doubt about it. It gives them a lot of breathing room, less reliant on outside funding, which can be a lifesaver if the economy gets shaky. Plus, it frees them up to make strategic moves, acquisitions, investing in some cool new tech, maybe even riding out a rough patch without having to make drastic cuts.
Like having a safety net and a war chest all in one.
Exactly. Now, let's switch gears a bit. Their working capital, that's something else that stood out in the investor presentation. They're showing a positive trend in working capital days, which is a good sign. It means they're getting more efficient with managing their short-term assets and liabilities.
Sounds good, but can you break that down for our listeners who might not be familiar with the ins and outs of working capital? What does it actually mean for a company like Delhivery?
Sure, think of it like this. You're running a delivery business, right? You've got to pay your suppliers, your employees, all your operating expenses. But you're also waiting for your customers to pay you for the deliveries you've made. Working capital is essentially that gap between what you owe and what's owed to you.
So it's a measure of how quickly they can turn their operations into actual cash flow.
Exactly. And when those working capital days are trending downwards, it means they're collecting payments from customers faster and managing their payments to suppliers more efficiently. That frees up cash they can use to, reinvest in the business or just strengthen their financial position overall, gives them a leg up on the competition.
Makes sense. Now let's jump back to the competitive landscape for a minute. We know delivery's the top dog in India, but there are definitely other players in the game. What are some of the biggest threats they're facing in this market?
Oh, the Indian logistics market. It's a jungle out there. You've got the old guard, the established players like Blue Dart and Gotti. They've been around forever. They know the game. But then you have these hungry new startups, companies like ExpressBees and Ecom Express, and they're coming in with a lot of investor money ready to shake things up.
So they're getting hit from both sides.
Yeah.
How's delivery planning to stay ahead of all these rivals?
Differentiation, that's their key strategy. Their network is massive, like we talked about, reaching over 18,000 PIN codes. That reach, that's a huge advantage. And then there's the tech, of course. All those investments they're making in automation, data analytics, you name it. It's all about making their operations smoother, faster, more efficient, and offering a better experience for their customers.
So they're trying to be big enough to compete on price, but also smart enough to offer something extra, something that sets them apart.
Exactly. It's like they're building this tech-powered logistics machine, one that can handle all the crazy complexities of the India market and still come out on top.
Right. But even with all the tech in the world, there are some things they can't control, like the economy. How's all the inflation and fuel price volatility affecting their business?
Oh, those are definitely major headaches for everyone in logistics. Inflation, that just pushes all their costs up, right? Transportation, labor, everything gets more expensive. And fuel prices, it's like playing roulette. You never know what they're going to do from one week to the next, which makes it incredibly hard to, plan and manage their expenses.
It's like walking a tightrope, trying to keep costs under control while still investing for growth and staying competitive on pricing.
Yeah, that's the challenge. That's why their focus on operational efficiency is so crucial. They have to squeeze every last bit of productivity out of their operations to counteract those external pressures.
Yeah.
Otherwise, their profits will get squeezed.
Okay, let's circle back to those RTO volumes for a minute. We talked about what it means, but I'm still curious, why is this such a critical factor for delivery? Why should our listeners be paying attention to this?
Because every return, that's a lost sale for them, right? It's wasted resources and potentially a customer who ends up unhappy. Plus, they've got to deal with the whole hassle of reverse logistics, getting that package back to where it came from.
So it's not just about the cost of the return trip itself. It's about the lost revenue, the potential damage to their reputation if customers start having bad experiences.
Exactly. And when you see a significant chunk of shipments being returned, it's a warning sign. Something's not quite right. Something needs to be fixed.
Like what? What could be driving all these returns?
Could be a whole bunch of things. Maybe the product descriptions on those e-commerce sites are misleading, making people order the wrong thing. Maybe they're having trouble hitting their delivery deadlines, frustrating customers. Or maybe the products themselves are just, not up to par. It's hard to say without digging deeper.
So there are a lot of potential suspects.
Oh, yeah. They need to really analyze their data, figure out what's causing those returns, and then, work with their partners, the e-commerce companies, to find some solutions.
It's not a problem they can solve on their own then.
Nope. It's a team effort. They have to work with the whole e-commerce ecosystem, improve the overall experience for customers, remove any friction points, and hopefully, bring those return rates down. Because at the end of the day, it's all about making sure customers are happy and the business is running smoothly.
Right. All right, so we've talked a lot about where delivery stands right now, the challenges they're facing, all that. But what about the big picture? What about their long-term growth prospects?
Well, e-commerce in India is showing no signs of slowing down, which is great news for companies like Delhivery.
So they're in a good position to capitalize on that growth.
They are. The key is execution. Can they make their strategy work? All those investments, the capacity building, the technology, the acquisitions, that's all about grabbing a bigger piece of that pie as it keeps getting bigger.
It sounds like they're really banking on e-commerce continuing to boom. Are they exploring any other avenues for growth, though, just in case?
Yeah, smart companies don't put all their eggs in one basket, right?
Yeah.
They're also expanding into some related areas, like cross-border logistics and supply chain solutions. The idea is to leverage their existing infrastructure and expertise to offer a wider range of services, which makes a lot of sense.
So diversify their income,
Mhm.
find new ways to add value for their customers.
Exactly. In a fast-moving market like India, you got to be adaptable, got to stay one step ahead, and that's what they're trying to do.
Makes sense.
Yeah.
All right, so we've covered a lot of ground here. Their financials, their operations, the challenges they're facing, their future prospects. It's a pretty complex picture, but I think we've managed to break it down into some key takeaways for our listeners.
Yeah, I think so too. And you know what? To wrap things up, I want to leave our listeners with a question to ponder. We've talked a lot about e-commerce, but what about the bigger picture, the Indian economy as a whole? How might things like government policies, infrastructure development, even changing consumer behaviors, how might those things shape the future of logistics in India? Because at the end of the day, delivery's success is tied to the overall success of the Indian economy. It's a story that's still being written.
That's a great point. And on that note, we'll wrap up this deep dive into Delivery's Q2 FY25 performance. Thanks for joining us. We hope you found it informative and maybe even a little bit entertaining. All right, welcome back. So we've spent this whole deep dive really digging into Delivery's second quarter performance, and wow, there's a lot to unpack. We saw some impressive revenue growth, a clear focus on keeping those profits up, and some pretty big moves when it comes to investments, expanding their capacity, all that tech stuff. But we've also seen some potential roadblocks, right? Those high return volumes, and of course, all that competition in the Indian logistics market.
It's a tricky balancing act for sure. They've got all this positive momentum, but there are some real challenges they got to navigate if they want to stay on top. It's a fast-moving market, got to be able to adapt.
So let's try to bring it all together. What are the key takeaways here for our listeners? What should they be keeping an eye on when it comes to Delivery's future?
Well, one thing that really stands out to me is that delivery is clearly in it for the long haul. They're not just thinking about delivering packages today. They're building this whole sophisticated, tech-driven platform that can handle the future of e-commerce in India. As the market keeps growing, they want to be ready to scale up and meet those demands.
Yeah, it's not just about meeting the immediate need. It's about anticipating what's coming next and having the infrastructure in place to handle it.
Exactly. And they're doing all this while keeping a close eye on profitability. Their recent performance, it shows they're serious about building a sustainable business, one that can thrive in the long run. That's essential if they want to attract investors and keep growing.
That's good to hear. But we can't forget about those high return volumes. That's a pretty big hurdle they'll need to clear.
Oh, absolutely. Those returns, those are a potential drain on their profits. And, they could end up with some unhappy customers if they don't get a handle on it. I'm really curious to see how they approach this. Will they try to improve their own internal processes, maybe work more closely with the e-commerce companies to smooth things out, or maybe a bit of both?
Yeah, definitely something to watch.
Yeah.
Now, what about the competition? Can Delivery realistically stay ahead of the pack in such a cutthroat market?
Well, they do have some advantages, right? Their size, their reach, all that investment they're pouring into technology. But they can't afford to get complacent. The Indian market is constantly evolving. New players are popping up all the time. So they got to keep innovating, keep finding ways to offer better service than their
So
rivals.
they're in the lead right now, but they got to keep pushing if they want to stay there.
Exactly. And, to wrap things up, I think it's important to remember that delivery's fate is ultimately tied to the fate of the Indian economy as a whole. We've talked a lot about e-commerce, but what about the broader economic landscape? Government policies, infrastructure development, even things like changing consumer behavior,
Yeah.
all those factors are going to play a role in shaping the future of logistics in India. It's a dynamic situation, lots of moving parts.
That's a great point. Delivery story is really part of a much bigger story, the story of India's economic transformation. And that's a story worth following closely. So on that note, we'll wrap up this deep dive into Delivery's second quarter performance. Thanks for joining us. We hope you found it insightful.